Welcome to Kotak Securities YouTube channel. I'm in the Chaudhary and this is Kotak Chatroom, a show where we talk about primary market IPOs and interact with managements to get their opinion. In this special edition, we are going to be focusing on Radiant Cash Management Services Ltd upcoming IPO. और इस IPO पर बातचीत करने के लिए I have the top management of Radiant Cash Management, joining Colonel David Devasahayam, Chairman and Managing Director of the company, और इनके साथ एन मुथुरमन भी जुड़ रहे हैं जो डायरेक्टर हैं स्ट्रैटेजी एंड इन्वेस्टर रिलेशन के इस कंपनी के साथ. Gentlemen, welcome to Kotak Chatroom and thank you so much for taking the time out.
Thank you very much for giving us this opportunity today. We are looking forward to this interaction.
So I would like to start with you. What is the objective of launching this IPO and how will it really help the company?
It was, when it was about 2015 that we got an investor on board because we required growth capital at that point. It was a private equity fund called Ascent Capital. So they came in January 2015, and this coming January they are completing 8 years. They have remained invested with us. So this IPO is more to provide an exit for our investor, as also to raise some growth capital, which we feel some fresh capital that we are planning to look into. And that's the reason why we're going for this IPO.
Mr. Muthuraman, could you please give details on the product and services that company offers?
So the company is into retail cash management services. So if you just quickly understand the cash cycle, cash get printed at RBI Mint, moves to RBI Vault, moves to Bank Vault, moves to bank branches. From bank branches, it reaches body public either through the teller at the bank or through the ATM. And then body public spends it at retail outlets, and the retail outlets have to get that cash back to the bank. This is the last leg from the retail outlets to the bank is retail cash management. That's what we do. 97% of our revenues come from banks. We provide doorstep banking on behalf of banks to various end customers across banking, financial services, e-commerce logistics, organized retail, railways, petrol bunks, pharmacy chains, across a whole host of end user segments. We provide this as a service, and we charge the banks for providing this doorstep banking service largely on a per point basis, a fixed amount per point per month we charge. And then on top of it, we add a set of value-added services. For example, if the bank does not have a branch presence in that location, we deposit that cash in our own account and then electronically transfer it to the bank the next day. It's a value-added service that we charge on top of this. The value-added services tend to be fairly healthy margin business for us.
So, sir, as you mentioned about the company's different business verticals like cash pickup and delivery, network currency management, and cash processing, which segment is the best performer and what would be the revenue growth drivers going forward?
In terms of the percentage, the cash pickup and delivery services, account for approximately about 67% of our revenue. And the network cash management accounts for about 24%. So these are the two principal services, with the other services which Muthuraman mentioned, catering for about 5% to 3%. And that's the kind of breakdown that we have. Now, with regards to the layers of growth that we are looking at, firstly, we have the clients. Clients are the banks, and the banks have end customers. So the end customers can be an e-com major player. You can think of any name, they are all our customers. Now they start with, say, 400 points. Today, starting with 400 points, today they're at, say, 2,000 points. So there is an organic growth that happens because each of our end customers has got his own growth plan, and that growth, that organic growth which is there, that results in a certain percentage of growth that we are observing. Then the second layer of growth that we observe is the banks acquiring new customers. We always joke amongst ourselves that our biggest competition is ignorance. Because there's such a reasonably priced service which is available, particularly for organized retail players and organized market players. And even then, many of them are not aware that it exists. That's why, as per the Frost and Sullivan report, the entire industry today is doing only 1.4 lakh outlets out of 30,000 potential outlets.
30 lakh.
30 lakh potential outlets. So, this is the other segment of growth where our banks continue to take on new customers. And the third layer of growth, which we have now pended till we are going public. Once we go public, we have a certain standing. We also have certain financial strengths that we have within ourselves. And the fact that now, as per the RBI regulated norms, there are only 6 players. So we have a certain brand recognition in the market. Based on that, now we are going in for direct clients. Now, what are direct clients? Now, if you take the Phoenix City Mall, there are approximately about 350 outlets there. Currently, we are only picking up, say, from 14 outlets. So we are targeting the rest of the outlets there. Makes all the sense, and it seems really illogical that all of them have one person going and depositing their cash in different accounts. When we have a full-fledged, cash van along with gunmen and all the paraphernalia available, and it is going there, the entire infrastructure, we can pick up from the other outlets also who require the same service. So now we are targeting them in a direct manner, and we have got very good marquee clients now as direct clients, though the percentage even now is not very significant, but this another segment is likely to grow very significantly in the coming years. So this all together, we are looking at a growth every year of about 22 to 24%. I hope
Fairly healthy growth. We have had a track record of fairly healthy growth in the past, and the business is picking up well. We are adding more and more clients, so that should give us a fairly healthy growth trajectory for the coming years as well. To put things in perspective, for the first quarter, the audited accounts, we reported about 84 crores in revenue compared to first quarter of last year, which we disclosed in the DRHP, was only 59 crores. So that is a remarkable 30% plus growth in the first quarter. Please note, the last year first quarter had a Delta wave impact. So from that lower base, we had a fairly healthy growth. First quarter is not our best season. April, May, June is a relatively lean season. October, November, December, festive season tend to be the busiest month for the country as a whole, and so it is for us, because our end users are in the e-commerce logistics, NBFCs, gold loan companies, insurance companies. All of them have very good season in the October, November, December quarter. So that should help us register much better numbers in future.
So the Indian cash management services market revenue grew at a CAGR of approximately 10% during the period of FY 2010 to FY 2021. So what kind of growth can we expect from your company in the next 3 to 5 years?
See, in the past, the growth had been muted. Our own growth has been substantially higher in this period. The industry as a whole did not grow well because it was a consolidation phase for that industry. As per Frost & Sullivan, there were over 17 players in the cash management industry, cash logistics industry in 2015 that has shrunk to 6 players today. So it has resulted in fairly healthy growth for us. The period that you referred also had 3 major episodes. One is a demonetization, second is a GST implementation, and the third is 2 waves of COVID attack. So all of that had muted growth at various points of time. But as per the Frost & Sullivan, they're expecting 20.3% growth CAGR between 21 to 27. We are a market leader in the industry, so we expect to grow slightly better than that.
So technology is playing a vital role in different business verticals. So आपकी कंपनी में किस तरह के innovations या new products को launch किए जाएंगे?
See, just to give you a sense of it, we move between 400 to 500 crores every day. And I, as the managing director, insist on rupee for rupee reconciliation at the end of the day. Now, this is only possible with cutting edge technology. And we have our own ERP, which has been developed in house. We have a team of, got a wonderful CTO driving a team of about 25 developers. And this ERP is consistently being customized. We are all the time generating new modules to meet new customer requirements. Now, in addition to that, we have also prepared very user friendly apps, which are used by our custodians and cash executives in the field, which ensures that there is, this is also a safety measure. It's an inbuilt safety that we have and security measure that ensures that there can be no misaccounting, or there cannot be any, um, uh, improper accounting of the cash that is being picked up. In addition to that, now what we are doing is, some larger customers, you can just think of the most important, e-com player or the largest petroleum company. They all are asking us to design and create specific software so that they can look into our ERP. So there is that kind of integration which is happening currently. So, and this makes also our business extremely sticky. And in addition to that, now we have API integration with some of the bank's core banking solutions. And this is the future. It has started with about 4 banks, but I expect this to rise further the time ahead. So you're absolutely right. Cutting edge technology is the way forward.
Last question, we would like to understand what is the USP of your company?
See, as I mentioned, the industry is very, very a low penetrated business. So we have a significant opportunity to continue to grow in this same line of business for many years to come. At the same time, we do get opportunities in two specific directions. One is a similar field, like, say, for example, if you take a global players like Loomis or Brinks or Prosegur or G4S, etc., they all do, besides retail cash management, they'll also do bullion movements, gems and jewelry movements, etc. So that is the nature of the business is similar. The pricing, profitability, and of course the risks are correspondingly higher. So we may consider expanding in those. At this point of time, some pilot projects are on, but over a medium to long term, that could be a significant growth opportunity for us. The second is also the digitization. So we have presence in 55,000 points. So that's a very large footprint pan-India. We are present in every district in the country except Lakshadweep. We operate in 13,000 pin codes out of 18,000 pin codes in the country in 5,300 plus locations. So such a large network is actually can be a vehicle for launching several other fintech products along in the same route, same existing network. We have had some initial discussions with banks, etc. Other in the sense, in terms of direction for growth, that could provide us some opportunity, but nothing concrete at this point of time that I can confirm to you.
As to what is the USP of our company,
Yes.
the USP is that I was from the armed forces myself. I spent 25 years in the army, and therefore, when we came out, and this is zero error business, we're handling public money. So therefore, it seemed just right to draw extensively from the ex-service fraternity. And today, 22% of our company is ex-service. And therefore, that's the culture and that's the DNA of our organization. Every organization has to have a culture and a DNA. And this is the culture that we have. And our services are rendered with a great deal of pride, and it's carried out very carefully. And that's why we have one of the best cash loss and transit track records in the industry. In addition to that, we drive the business in a very frugal manner, and that's why one of the reasons we have the best ROE and ROC numbers in the industry.
Thank you so much for joining in. We wish you all the best for your upcoming IPO. Thanks.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.